Well, I'm going to go ahead and get started. I think we are, people are still coming in slowly, but we'll go ahead and get started. Good afternoon, everyone. My name is Kelly Willits, and I am the Professional Development Director at Mid-America Arts Alliance, and I'd like to welcome all of you today to Nonprofit 101 with Lisa Gertsch and Luis Negreiros. Please remember to keep your microphones muted until prompted by the hosts. For questions, feel free to in the chat, and they'll be addressed at the end of each section, but I want to encourage you to write the questions in the chat as you get them. So you don't have to wait till the end of the section to put your questions in. It would be good to put them in while this section is being discussed, because we will probably find that some of your questions, other people have those as well. If you want to remain anonymous, please feel free to send them directly to Luis, and he will read them during the question and answer. We will have links to websites, mailing lists, and newsletters in the chat. And I'd like to take a moment and thank Total Captions for their services today. For English captions, simply click the CC icon at the bottom of your Zoom screen. However, Spanish captions, or to adjust the size and contrast, please click the link in the chat box. Briefly about Mid-America Arts Alliance. Mid-America Arts Alliance strengthens and supports artists, cultural organizations, and communities through the region and beyond. We are a nonprofit regional arts service organization representing Arkansas, Kansas, Missouri, Nebraska, Oklahoma, and Texas that focuses on strengthening communities and improving lives through extraordinary cultural experiences. We are artists, administrators, historians, preservations, writers, painters, photographers, and activists. Engage is Mid-America's community-centered professional and organizational development program that focuses on leadership training for small to mid-sized arts and cultural organizations. Using a combination of workshops, coach consultations, and peer-to-peer learning opportunities, Engage works with participants to govern more effectively, become more financially and fiscally astute, and develop strategies to address community needs. CASH, one of our partners, Creative Arkansas Community Hub and Exchange, was formed in 2019 to act as a central regional agency committed to connecting, supporting, and developing the region's arts, culture, and creative communities. CASH brings cohesive vision and strategy to the region's organic creative activities, uplifting local artists, the nonprofit sector, municipal leadership, creative industries, and arts philanthropies and investments. Together, these organizations partnered to create Art Connect program of Northwest Arkansas. Art Connect is a 2-year organizational development program and a cohort of local Northwest Arkansas arts and cultural organizations. This program is designed to deepen the impact of nonprofit arts and cultural organizations that are wedded to mission-driven community engagement. Also, we inspire participants to become active learners and invigorate a renewed creative community that is instinctively connected. This program is made possible through the generous funding from the Walmart Foundation. Now about today's presenters. Lisa Gertsch and her consultants provide comprehensive financial services to nonprofit organizations on a project or ongoing basis. Experienced with all sectors of the nonprofit world, Gertsch and her team give small and mid-sized clients the tools necessary to make informed decisions and plan effectively. Gertsch uses her Big Four audit experience to solidify an organization's internal controls, policies, and procedures, and her Silicon Valley manufacturing background to help organize and stabilize systems. Luis Negreiros is passionate about bringing financial management awareness to the nonprofit sector. As a financial, oh Lord, please forgive me. As a financial professional of 15 years, Luis has been helping nonprofit organizations with financial support with an emphasis on strategy, analysis, and board communication. I realize that was a lot to take in. We'd be happy to answer any questions related to any of the multiple things that I shared with you today. Save the interruption by my cell phone ringing repeatedly. But without any further hesitation, I'd like to turn this over now to Luis and to Lisa. Thank you.
Excellent. Hello, everyone. Let me get this going here. There we go. I think we're all set. Okay, welcome to the wonderful world of nonprofit accounting. First of all, it's great you came. I know it's not maybe the most exciting thing you want to do, or maybe this isn't really what you knew you'd have to take on so much when you started your nonprofits, but you know, you've got to do it. You've got to know what's going on with your money. The better financial information you have, the more better decisions you'll be able to make. So we're going to cover a lot. It's going to be super basic information. Like Kelly said, Luis is going to monitor the chat. If you would just put your questions in there as we go, you know, when you think of something, put it in. So you don't have to save them toward the end, or, you know, you don't want to forget it by the time we get to the end. And that should work pretty well. Of course, standard group settings apply. If it's some super specific question to just your org, on the questions slide, there's going to be our email address, and you can email that to us and we'll get back to you right away. But most of your questions are probably going to be someone else is going to go, oh yeah, hey, I needed to know that too. So feel free to, you know, we want a lot of interaction. I actually want to be helpful. I don't want to just be like, oh, whatever, I sat through this thing. You know, we really, really do want to be helpful. So please interact with us. That would be great. All right, here is the one pager. These are 8 bullet points. Like if you get these 8 bullet points under control, you should have all the information you need to manage your business and stay out of trouble as far as compliance goes. So I'm just trying to really, it can be so overwhelming when you start and you're trying to figure out what's all going on, but these 8 things, that's what we're going to focus on. And if you understand all these 8 things and get it under control, we should be good. So we'll walk through each one. The financial management part, of course, is just running the business. It's what you need to know to be able to run a nonprofit successfully. And then compliance is just the reporting, the things you have to do. And you know, you can't fall behind in those. So we'll go through all of these together. Okay, the first one is accounting software. It's really good to get a good software program. The one that almost everyone's using these days is QuickBooks Online, mostly because it's $75 annually from Techsoup, and we'll go into Techsoup more a little bit later. So it's super cheap. Like for-profit businesses have to pay $75 a month for it. So it's a really good price. There's really no reason. Hopefully everyone can afford $75. The good things about online are it's backed up. It's on the cloud, so it's always backed up, and accessibility, so you can log into it from anywhere. That it works really well for us since I'm in and out of people's QuickBooks a lot. And if it's used properly, it can be a CRM. If you enter things the right way, it keeps track of your donors. You know, not to the extent a proper CRM would, as far as relationships and all that, but it's still, you'll have some good information, and you can either even download data to Constant Contact and whatnot. So QuickBooks Online is what almost everyone is using. If you're on QuickBooks Online, but not for the great Techsoup price, you can migrate. They make it very difficult for you because they want you to keep paying $75 a month. You have to use Explorer. You can't have attachments. So it's kind of not the easiest thing to do, but it's definitely doable. And it's worth the savings. I mean, $75 a year versus $75 a month is huge. The QuickBooks software, they don't really use debits and credits. It's pretty user-friendly once you get the hang of it. You need to set up 3 areas really carefully: the chart of accounts, products and items, and classes. But once you get those set up, you can really go to town and do a good job. And Luis and I have several bookkeepers that work for us, and frankly, our best bookkeepers are the ones that aren't trained accountants, because it's pretty logical, and it works really well. You can connect the banking, your bank account and credit cards to it, so things download automatically. And PayPal too. A lot of you are probably using PayPal. But like I said, there are tricks to using it properly so that the donors and the customers are maintained well. And the other great thing about it is you can, if you're getting grants that you need to track and report on, you can track grants with classes or donors. I could spend 3 days telling you about QuickBooks software, but classes is one method of doing it. But lately I've been switching to just tagging donors on expenses, and that seems to work even better. So it's a really great way to track grants. We'll go into grant tracking more later. Whoops, sorry. Let me get it back. The Excel, of course you need Excel too. QuickBooks downloads in Excel easily, and you're going to need to do that once in a while. you know, bottom line, if you just have a check register, at least that's something. Reconciler check register once in a while. So it's really good software. If you're on QuickBooks Desktop, that's fine. The just to be clear, desktops, your data is on one computer, it's on one hard drive, and that's kind of the risk, is it's only on that one hard drive. So you can't really have multiple people working on it or multiple people looking at it. You can pass a file back and forth, but that gets cumbersome. The good thing about desktop is you can also buy that from Techsoup, and it's I think it's about the price, but you can use the same one for years. I mean, I had an organization that I help once in a while, and she just upgraded from 2017 desktop, and you know, it's doing fine. They want you to upgrade every year to get another fees, but you know, it can definitely last you a long time. So it's very, very cost effective. It's just, I guess, for what Luis and I do, it's hard to hop in and out of desktop. So we definitely prefer online. A lot of accountants don't like desktop, don't like online. I'm not sure. I think it works well. So if you take nothing else out of today and you didn't know about Techsoup and now you do, then this was useful. Techsoup is a great organization. It's out of San Francisco, and they collect all the Silicon Valley software and disperse it out to nonprofits. You know, there's a fee, but it's a very modest fee. But for example, the online QuickBooks Online fee is $75, and then you just renew it every year. I mean, it's so worthwhile. And they have Office 365. Luis, I think you've used it some more. That you can get Office 365, Microsoft 365 from it. They've got QuickBooks Desktop, everything, and they've also started to get hardware, which I didn't really realize. I don't know if I know of anyone who's got hardware from there. And then I've got a lot of emails lately about courses and workshops. They have a couple of donor database CRM software, but read the fine print on those, because I had someone looking into them heavily, and it was super cheap for the first year, but then the regular rates apply. And of course, if you've ever worked with one of those, it's really hard to get it uploaded the first time. And so they're hoping to get you hooked, and then it's so bad to migrate to something else. So definitely read the fine print on that. I also had someone looking into, they have DocuSign, and it was similar. It kind of, they ended up thinking it wasn't worth it. So read the fine print, but it's great. You just have to sign up for an account by sending your determination letter, and they would need a couple of other documents. But it's really, I mean, it really can save you a lot of money. You know, take a look around. So are there any, Luis, do we have any questions about the accounting software?
No, I think you covered it all really well. We did have one just asking on what is CRM, and do you want to elaborate on that? We did define a little bit on the chat, but if you have anything else to add besides it being a independent software from your accounting software, feel free.
Yeah, no, it's just that customer relations management,
Mm-hmm.
I believe, is what
is a term.
Yeah, yeah, that's it. So no, that's what that is. Or the donor database. What are the other big ones, Luis? Donor Perfect.
Yeah, Donor Perfect is
Blackbaud.
yeah. Mm-hmm. I think
okay.
To your point though, that you know, QuickBooks can do a really good job for smaller organizations that really need to just maintain and track their donors. But for, you know,
Mm-hmm.
as you grow, and that's what we want you to do, right? Grow your mission. Right. You would at some point look into some bigger, more beefier software that, you know, really could give you a lot more than QuickBooks does. But QuickBooks does a really good job.
Yeah, and if when you get to the point where you need a donor kind of customer interface, depends on your needs too, because we have a couple orgs that do ticketing, and so they need ticketing and membership versus other orgs that just kind of need relationship management. So it depends. Again, that's a whole topic you could spend a whole day on. So great. Yeah, CRM, it's one of those buzzwords we use and we forget that not everyone knows what it is, which is fine. All right, so that's software. So let's talk about some basic financial statements. There's really two: the statement of financial position and the statement of financial activity. Now, the financial position is a balance sheet. It's what's used out there in the for-profit industry, and nonprofits use it a lot too. It's kind of interchangeable. And then the financial activity is the income statement, or you see the profit and loss or the P&L. A lot of times it's just what's the P&L. And even foundations who know, should know the right terminology. A lot of times just say income statement, profit and loss. So it's all fine. These are the two basic, and whenever I run them, I really, when you're reporting, I really like to run comparatives, because you know what happened last year. And so if you're comparing this year to last year, it's just a really good way to get a feel for how you're doing. Like if you compare your last year's balance sheet to your to this year, and you're like down $50,000, oh my gosh, what happened? Does that make sense? And it's just a really good way to keep your eye on things, and we'll talk about that more lately. But these are the two basic types of statements: financial position and financial activity. And here's the way I like to explain them. The position is kind of a snapshot. It's always for one day. It's like, this is what you have on this day. It's very specific. It's kind of like your warehouse. Like, this is what's in your warehouse. It lists your assets in your warehouse. It lists what you owe in your warehouse. Boom, this is what it is for one day. And then the financial activity, or the income statement P&L, is like the factory. It's what you're churning up. It's always for a time period. It's for a month, or a quarter or a year. It's like, this is what you've done. It has the income and the expenses. This is kind of what's been happening in your factory for the whole year, for the whole time period. And then the bottom of that rolls into your balance sheet, which I'll show you. So here's a sample of a balance sheet, and you can see that it has the bank accounts receivable, which is monies that are owed to you, accounts payable. It lists everything. And then here, this number here, you see that net revenue number, 60,000. If I switch over to the next slide, it's smaller, but right down here is that next slide. This is for a whole time period. You see how it's January through December. This says you made $60,000. And then when you go back here it is. And this is just as of the end of December. So that's how that works. I think that's the best kind of way to look at it. It's a time period versus one day, factory versus warehouse. I hope that makes sense to everyone. Now, as far as when you're actually in the financial statements, the balance sheet has your assets, which are things you own. It's cash. You might have fixed assets. Accounts receivable are things people owe you. And accounts payable then are things that you're owed, and then the net of those two things. And on this one, it's retained earnings. It's net assets, retained earnings, equity. That's all the same too. Again, those are used interchangeable. Net assets is the proper term, because if you think about it, net assets mean assets minus liabilities. So you see here how this asset account, this 88,000 adds up down here. These two always have to match. And if you're using accounting software, it will. It can't not match. So that's what the statement of financial position is. And here's the statement of financial activity. Again, this is for a year. And here's what I'm talking about, how you can compare, because like right here, you can say, oh, wow, I increased 7,000. That's great. Does that make sense? And oh yeah, so-and-so, we got a great donation from them. So that's why the comparisons are so great. Or like here, the annual gala, it's like, oh, wow, I made a lot less last year. What happened? And you can say, oh, right, I had to pay for this. Or so the comparisons really work well. And let me preface all this is like, you get these statements off your accounting software once it's all uploaded. And, once it's all entered, this is what spits out. These are all routine statements you can get off QuickBooks at any time or any accounting software program. So this is a P&L compared to your to prior year, which is a great tool. And then comparing it to budget too, same thing. Here's individual contributions. Oh wow, we're way up. That's great. Does that make sense? Oh yes, we have 2 new people who gave us a lot of money. And down here, it works for the expenses too, of course. Program supplies. Oh, we went up in program supplies. Oh yeah, that's right. We added that event where all the kids came to, and we bought them T-shirts, and so it really works well to have comparative financial statements. If you all have a treasurer, which hopefully you can, or even if you don't have a treasurer, if you're super small, running these statements each month is just the most basic form of internal control that you can look at, and you can look for variances and try to explain variances. What what Luis and I do when we review these each month is we look at this, and anything that's like 10% is a standard thing. Like, oh, 10% over, they're under, because your point is like, oh shoot, did we forget to pay someone? Is something classed wrong? You know, what were we thinking with the budget, and we're under? And it's just a really good way to kind of keep track of what you're doing, just for a big picture overview. And then you can dive into anything you need to know deeper. So those are the basic financial statements. So one's the position, which is the balance sheet, that's your warehouse, and then activity is always over a time period, and that is your factory, kind of what's been going on in the factory. Some of the terms on these, like I said, accounts receivable means money that's owed to you. If you get someone pledges a grant to you, you can record that but they haven't paid it. So that's a good accounts receivable. Again, monies to accounts payable if you've incurred an expense but you haven't paid for it yet. Let me see up here. Let's talk about cash versus accrual. I guess I skipped over that. There's basically two ways to do your accounting. There's cash basis, which is just very like when cash goes out the door, that's when you record it. When you get cash in the door, that's when you record it. It's like how you would kind of keep your checkbook at home, just in and out. And that's fine. You can do that method. It's GAAP accounting, which is generally accepted accounting principles. If you grow and as you get audited and you want more standardized reporting as required by outside entities, GAAP accounting requires you to do accrual accounting, which is when you're more like putting things in the right time period. For instance, if you had an expense in April, but you didn't get the bill until July, you're going to go back, you're going to record that in April, and then you're going to pay for it in July. It kind of splits that transaction in two, but the expense was actually incurred in April, so that's where you want it recorded. I mean, I frequently say, yeah, you can do cash, but accrual's the right way to do it. But it just matches things up. And again, with donations too, say you get a two-year grant, a 2-year pledge, you can record that on the date that you know of the pledge, because the money's owed to you at that point, as long as it's written and documented and all signed off at 100%. And then you record that when you get it, and then you record receiving the payment later, as opposed to cash accounting when you would just record it when you got the cash. Now, the reason accrual accounting to me is better is it gives you a clear picture of your expenses. Say you're budgeting at the end of the year, or it's the end of the year and you have one of your big fundraising events in December. You have expenses for it in December, you received income in December, then some of the bills are late and they don't come until January, and you're paying out a bunch of the expenses in January. You just don't have a good way of seeing what the actual net of the event was. You want to put everything in the right spot when it happened. That's the beauty of accrual accounting. And pretty much everyone we deal with, we do accrual accounting. There's a couple really small ones that use cash, but accrual kind of really is the right way to do it. That's why when you start having external reporting, you basically have to do accrual. Audits are only accrual. That's the way everyone looks at it. Sometimes for grant reporting, they want it cash basis. Some of the arts grants, at least here in Texas, want it cash basis, so you kind of back into that. But that's what that means. You probably heard that term, cash versus accrual. So that works with the timing. Also, the good reason to put things back in the right spot is later when you're going through and budgeting. If you're looking at your, say you're looking at prior year to budget something, but you didn't pay for that a big expense until the next year, it's not in the right spot for you to remember it. So that cash versus accrual is a big distinction. Position. Some of the terms on the P&L, the statement of activity. The way I usually set it up, contributions, I usually break it out into these individual corporations and foundations. That's kind of standard reporting that almost most foundations look for. They want to know when they want to know where your sources of income are, it's from those major groups. And then they also want to know, break it out into, looks like on this one I don't have, if earned revenues. If you have earned revenues, like from galas, or if you provide workshops, if you do classes, if you have money, if you provide services and are paid money, that's called earned revenue. And that's a big distinction too in the P&L. donations versus what you earned, what you had to work for. So we break that up. And then there's a lot of subcategories under here. There can be, but it wouldn't fit on the screen. So these are just the standard. These accounts down here are called natural accounts. They're what any business would use. Like every business has office supplies. Every business has postage and shipping. And then, so you want to keep those really, really general. And then there's functional categories for nonprofit accounting, which is the three main categories are administrative, management and general, fundraising, and programs. And then those when you're in an accounting program, you can break those up. You can allocate those to those areas, and then you can see it three-dimensionally, which was too small to put on this. But basically, your accounts should be very neutral. We always work off the AICPA nonprofit standard chart of accounts, which is huge, but we just pick the ones we need. But it's a good source. It's a good source for that. And then again, compared it to budget, and we'll talk about the budget next. So anyone have any questions, anything, Luis, about that? Did I forget anything?
Yeah, we have a few good questions.
All right.
So one of them is when we're booking, talking about the P&L or the statement of activity, the question is, what happens to capitalized equipment? So it's not showing up on the P&L, where to go, right?
Yeah, it goes up on the balance sheet. That's a great question. Say you bought a $1,000 piece of equipment. Yeah, you don't want to expense that. A gap, well, for cash accounting, you would just expense it, but for accrual accounting, yeah, you put that on the balance sheet and you would book it in fixed assets, a separate account, and then you depreciate is the term used, and then you kind of depreciate. Say it's a computer. Say you bought $2,000 expensive Apple computer. Your cash goes out and it's not on the P&L, it stays off there, but you put it on the balance sheet as an asset because it is an asset. It's something you bought that you're going to use over a period of time. So you put that as a fixed asset, and then you depreciate that over 3 to 5 years. It depends on, you kind of decide what you're going to do and then you stick with it. Computers, I usually do over 3 years. Other things you might do 5 years. Depends on what the asset is. So then you book it there, and then you slowly expense that cost, which is what depreciation does. It slowly spreads the cost to that machine over its life. So it would be, expensed over 3 years. And that, again, is accrual accounting. It's trying to get things to kind of match up, because in 3 years, you're probably going to have to replace that. So yeah, that's a great question. And then the depreciation is an expense on the P&L.
Another question we have is, what's the best method to recognize revenue? When should you recognize revenue? At what point? If you know a donation is going to come in, do you recognize it then? 2 months from now? What's the best practice?
GAAP accounting, again, generally accepted accounting principles, which is like the laws that govern accounting, says you recognize the income when it's documented, when it's written and it's documented. So, and that can be an email. It needs to be an email from the donor. It can be an email saying, hey, yeah, you're having a gala, I'll buy a table at $10,000. Boom, you can recognize it on the date you get that email. Luis recently ran into some situations where he was forwarded an email that someone said someone was going to pay. It's like, no. You need to wait until it's from the actual person. So, and then for grants, if you get a grant, and it's usually you get an email saying, hey, this foundation gave you a grant, at our board meeting on this date, and we'll send the paperwork. You can record it the day of that, they say the board meeting, when the board gave it to you. And then the other really good thing about that is it gets it, you record it and you put it in the instant accounts receivable, and it pops up and you're owed the money, and you'll help keep track of it. Because what can happen in medium-sized orgs, I guess, until they kind of figure it out, is development goes out and gets the money and raises it. And then if there's not good communication, accounting can record it, but then it's like, okay, who's actually responsible for collecting that money? Because development might think it's accounting, or accounting might think it's about. So I like to get things documented. Once it's written, boom, I put it in there, and then it's there. What I found is easier if you have big gala events. I don't like that term gala, but anyway, the big fundraising events is I kind of let development, if you've got someone handling that, kind of let them do their thing. And then when an event's over, it's like, okay, who do you have written, documented, who's going to give you money, who hasn't paid yet? And then I'll put those in just to kind of help them keep track of it and make sure it's reported. If you're lucky enough to have someone handling all those things for you.
All right, and I'm just going to add one more question so we can move forward. We have a lot, but I'll answer those off site. Is there a it's a two-part question? Is there a good list of the chart of accounts that you recommend for nonprofits and QuickBooks training that to get trained up?
Yes, we start with the AICPA. We actually have a spreadsheet where we have 10 different samples of chart accounts, and we have another spreadsheet with 10 samples of all the things you need of products and classes, and we're so happy to send those to you. Just email us at that address and we can send them to you, along with the AICPA listing, it's really long and it's little intense. So that's what we start from, but then we've just made it more user-friendly. So happy to send all of that to you. Was there something else in that though, the chart of accounts? Oh, and classes on QuickBooks? Yeah, I've got a slide here at the end. We're based out of Houston, and there's a University of Houston Small Business Development Center that gives a lot of classes that are good. They won't be necessarily designed for nonprofits, but it's the software. They'll get you up and running on the software. Or the United Ways in a lot of cities, if you're not, if you're in a larger city that has United Way, they offer some classes that are designed for nonprofits, so that can work for you. And then also there's so much like YouTube videos, and Luis, I think you had a good source at some point you were using. And also there's if you get the basics down, there's something called the Intuit community that's online, and it's all the really nerdy accountant types that all use QuickBooks, and they just go in there. It's like, hey, this didn't work, when something's strange. But it's pretty easy to find stuff online.
Yeah, I'll just quickly add to Lisa's point about YouTube. I mean, that you can always Google search something really quick, and YouTube usually has an answer to some strange QuickBooks question you may have. So I definitely encourage folks that if you're going to learn through practice, but if you have a specific question, sometimes it's just as easy as just searching it online, right? So definitely encourage folks to jump on and look through YouTube. I mean, it's helped me a lot, to be honest.
I still have to doing refunds are difficult in QuickBooks, and every time if it's a vendor refund, it's like I got to log in. How do I do this again? Because you don't have to do them very often. So yeah, no, those are great. Those are great questions. All right, so we'll move on here. Okay, as part of the one financial statement I showed you, this statement of financial activity versus the budget, you actually, you need to have a budget. And most people don't really get that excited about developing a budget, but it's so important. It's so important to have a plan, and that's really what a budget is. If you're coming from the for-profit world where the budget is like making your quotas and profit margin, that is part of it for nonprofits, but really the most important thing, the way to think about a budget for nonprofit to me is just like, it's the benchmark. Like, here's what we think is going to happen. And then of course that's not exactly going to happen. It never is, but at least you know what you thought at the time. And so then when things go this way or that way, you've got that marker, and it's really important to get that marker. It's just such a crucial cornerstone for the year, and then you can go from there. And especially lately with COVID, like no one knows what's going on. So you're doing the best you can to budget, but then, I don't think any of us thought it was going to last this long, and you've got to adjust. So variances from the budget aren't bad. It just means, it's just something to explain why you varied from the budget. It doesn't necessarily mean it was wrong. It's just, this is what happened. So the way to get a budget is once you have everything in your accounting software, QuickBooks will always assume, you basically download, if it's the first time, you download the P&L by month into Excel, and that's kind of what you start massaging. Because if you if you use that as the base, last year is always the best base, and then you can kind of adjust. Again, you know what happened last year and you can adjust. So I'll go over that a little bit. And then the general flow of it is, if you have an accountant, maybe you're, as the executive director, you're the accountant too, that's fine. But you basically get, you get a draft that's decent and looks good. And the bottom line, you should be, you know, you don't need to make a lot of money, but you want to break even at least, kind of just get a little cushion. Depends on your situation. And then you get that together, and then you review it with the treasurer. Hopefully you have the treasurer, and you get the treasurer reviewing it, making sure it looks good. And then they're the ones that promote it to the board, like, okay, here we have the budget, this is what we think is going to happen, to get board approval. Because you really should have board approval of the budget before the year starts. That's definitely best practices. Sometimes you might be a little late. I like to give like a little 2 months just in case, but to get the budget approved by the board before the year end is definitely best practice. And then once it's approved, you can enter it in QuickBooks and run all these reports. And the reason you do it by month, you'll see in the next section, is this cash balance forecast that we want to show you. If you, a lot of time the budget is just by year, because that's kind of how you think, here's what we're going to spend. And that's fine. I mean, that's a good base, but a lot of times we're given a budget by year, and then we have to split it. You have to gate it by month, because you really want to be able to keep track of it as you go. And again, you just do your best guess. At some point you're working on the budget. At some point you just have to stop. Just got to lock it down, because you could go crazy, especially like I said, right now when things are still so up in the air. So you do your best, lock it down, get it approved by the board, and then that's your budget for the year. And the other thing I really want to emphasize is, don't change your budget after it's board approved. Like, we'll go through that with the forecast, but I've had a lot of young orgs that are like, oh, we know this happens, so we're going to change the budget. And it's more just terminology. It's like the budget is set, it's done. You don't change it. You can do something different, you know, and you can reforecast, but you don't go back and change the budget unless it's super, super significant. Like I've had an org that had in-kind rent, and all of a sudden had to start paying rent like in February for the rest of the year. And there was this big discussion, and we're like, okay, let's go back and change it. But generally, you know, don't change the budget. It's not a good idea. Okay, so here is kind of what your budget would look like when it's all done. Sorry, it's as big as I can make it. Excuse me. When you download from Excel, it looks like this. And then if you know Excel, what you do is, again, this wouldn't fit, is you can insert lines in here, like for program supplies, and you can put actual vendors, or software is a good example. You insert lines in here and then have this be a total line, and you can put in those lines Dropbox, QuickBooks, Adobe, whatever you're using, so it just rolls up and adds up. And then you can get really specific. And again, the more time you spend on the budget, the more accurate it's going to be. But at some point you just have to stop. But it's good to take a really close look at it. And it really, you know, it sets the tone for the next year. So you've got it, assuming everything in QuickBooks from the prior year, you download it into Excel by month, you insert some lines, do some Excel. It's really not even that complicated Excel, and get it to add up. And then your net, like here the net income here for the year was $214. I mean, this org, it made sense to break even. We have other orgs that get 2-year grants. And since this is accrual accounting, this could be, you know, negative $100,000, but their expenses, they know they're getting a cash payment of $100,000 from another grant. And then we do a little reconciliation. That's complicated. This is accounting 101 here. But so sometimes a budget can be approved that's negative if it makes sense with the cash flow, because there's several arts orgs that, you know, make these 2 multiple year grants. And then you kind of spread that out, because with accrual accounting, the whole income is counted in 1 year. So yeah, so that works out pretty well. It's about it for budgeting. Budgeting's tough because it's really so specific. But like I said, if you've got the right accounting information in your accounting system, you download it, start with prior year, and you just go for it. This year, for a lot of 2021 budgets, we started with 2019 budgets, since 2020 was kind of a non-year. Luis, anything to add on that or some questions?
No, no questions. I think you summed it all really well. So everybody understands budgets.
And also it's like, ooh, I don't want to talk about that. Well, the big reason for getting a really good budget by month is you can next have a report like this, which this is the one single best thing I think we've done for our organizations is this cash balance forecast. And the logic in it is super basic. You've got your January 1, how much cash you had. You know that. You know, you reconciled your cash account for the end of the year. And then, you know, you've got your income that came in January, and you know your expenses. So you just roll that forward. Here's your beginning cash balance. You got income of 19,000 in January, less these expenses. So this is what your ending cash balance should be. And then this might be your actual. There's accrual adjustments always, but this is the basic concept. So what you can do is you can roll this forward. And the way this format is set up is like, okay, we didn't worry about accrual adjustments so much, but you know, we're pretty close. And then you carry forward the actual and you just keep rolling this forward. You see how this 666 is down here, up to here, comes down, rolls forward. And then you forecast this out and you can see that over here in November, it's like, crap, I'm out of money. I don't have money in November. And the key thing is, you know, that way back here in April, so you can figure it out. This is just so important. And that's really why you do the big push on the budget by month, because then you can get this figured out and just keep updating it. And as far as updating it, I've got another, this is kind of like an overall summary, but this is kind of a better example. Again, it's the same format that you saw as the budget and as the financial statements. That's the thing about a software program. You get it, it can all operate the same. Like, so up here is the cash balance. Here's the income, less expensive. And then we've got an accrual adjustment. Accrual adjustment is if you're American Express, if you have an American Express card or a credit card and the balance goes up $5,000 in a month, that's $5,000 of expenses that are down here that you didn't actually have to pay for. So that increased your cash balance because you haven't paid for it. And the next month, when you pay it, then you're decreasing your cash balance, but the expenses aren't down there. So that's the kind of things that are in these accrual adjustments, as well as depreciation, because that depreciation, what we talked about before, if you buy a laptop and you're spreading the cost over years, that's not cash, that's just an expense. And there's other things that are non-cash expense, and it can get complicated, but you can keep it as simple or as complicated as you want, really. But that's like generally what we do with these orgs. Like, that's, if it's a small amount, we just really don't even dive into it. If one of these amounts is all of a sudden $20,000, and it's like, crap, well, what was that? You know, we want to see if the accrual makes sense. But you do this and you forecast, and then you can see that you might be in trouble by the end of the year. And then you can go back and make adjustments. And you can go back and adjust your expenses. I mean, the orgs that we work with on an ongoing basis all have this report, and it's what, you know, basically they live by, is this report, making sure they're going to be okay. And hopefully it gets to grow, and then you can add a reserve line. But this is so important, and it's not that hard to maintain once it's set up. You can do it easy and just kind of maintain it and just kind of change the numbers and punch it in. Or Luis and I have a woman that works with us that is like so crazy on Excel, and she gets this thing to download. She gets the support to download on the back tabs of QuickBooks into Excel and just pulls all up, and it basically populates itself really easily. So it's just a matter of how much, you know, you want to get working on it. But I can't emphasize enough how great this report is. During COVID, when things started to lock down, we work with a lot of arts orgs here in Houston. And it was just like, oh God, what are we going to do? And we just started, you know, removing income, because you can run models off it. You can project off it. So we started zapping income. You know, we can't have summer camps, getting rid of that. We're not going to have a gala, getting rid of that. And then PPP loans. Okay, we're going to put this much in. You know, you just started forecasting how you're going to get through the year. So it's been super, super useful. Agreed, Luis? You operate one of these for a very large org.
Yeah, I would say 100% that this is a critical forecast to use, and it's not just for smaller organizations. We typically think, well, it's the smaller orgs that are suffering and that could be challenged in terms of cash, but it really comes down to a lot of orgs, and it, to Lisa's earlier point, as you extend your cash flow projection, you could see, where you're going to have those shortages. As an example, especially in the nonprofit world, right? That there's a certain period in time that your donations cluster. So when they do cluster and you're getting a lot of donations, those times are good. But you also need to be looking at the times when they're bad, right? And what are you going to do to be able to bridge that gap? So again, to Lisa's point, 100%, this is a really critical report to have in place, and especially during COVID, right? I can't tell you how much we live by this report for a lot of the organizations, big and small, because even if you expect a big gift at the end of the year, you have to get to the end of the year, and how do you get there, right? So again, it's just critical.
Yeah, and I'm running this report for a small arts org here in Houston now, and they're in really good shape. So and they always have their galas at the end of the year, and she's kind of taking this chance she wants to kind of repackage that and do something different. And so she knows now that it's like, oh, if I don't have one, we're going to be okay. So she can kind of take her time. And yeah, I just can't emphasize enough how great this is to have. But to get to this point, you've got to have your accounting software updated. It all feeds off that. But like I said, once it's all done and working, it's really smooth, and it's just so worth it. So, all right. Is there any cash balance forecast questions?
Not so much on the report, but just overall, we do have a question asking, can you find the cash forecast on QuickBooks? And it's a bit of a dated one.
Yeah.
QuickBooks is.
No, you can't. QuickBooks doesn't work well for forecasting. There is a forecast report in there, but basically you have to go in and just change. I think it starts with a budget information, and you just go in and change it. Where if you download it into Excel, and I'm so big on not doing things in Excel if you don't have to, but if you download it to Excel and you add those lines in between, you can actually go be super specific about what you're going to cut. Say you've got marketing or printing, say you decided to save money, you didn't print your quarterly calendars last year. You can go in there and zap exactly that, have it roll up and see its instant effect. But you can't really forecast. To forecast on QuickBooks, it'd be so time consuming, because I guess you can't have that level of detail in QuickBooks. Like, you can't download the vendor name. It doesn't give you those line items where you can make decisions and adjust. You could do it overall. You could transfer the budget as the forecast, and then you could just decrease things and see if it would work. But it still isn't as detailed, and it won't spit out the cash balance for you, which is really what most nonprofits kind of need to operate off of. Does that make sense, Luis?
Yep.
All right, so that's kind of the management part. Like, if you just to run your business, software, financial statements, this cash balance forecast, that's real, those are basic things, and I think you'll be okay. You'll have the information you need. I'm not saying, you still have to get money and do programs and all that, but you'll have the financial information you need to make good decisions. All right, so now the next part is the compliance. What do you need to do to stay out of trouble? So the first one is the big one. Let's start with the federal government, working down, is the Form 990. Now, that's the annual report. It's similar to a tax return. Some people call it a tax return, but it's obviously not taxes, but it's the annual information report that you have to send into the IRS. There's 3 different levels. There's what used to be called the postcard, the Form 990N, if you're 50,000 or less. And what that is, that's so easy. I've never even done one. you just, from what I understand, is you log in and you register with the IRS with your tax ID. You just go in and you basically say, yeah, I had less than 50,000 of income, and you're done. Like, that's it. It's super, super easy. Now the middle one is called the EZ, and that one is 4 pages long, and it's a little bit more, it's more detailed, but you still have to attach all the schedules, but it's just kind of more of a summary. You don't go into quite as much detail. Frankly, it takes about the same amount of time to prepare that one as the full one, because on the EZ is where you need to break out, you need to tell them what your program expenses are and kind of detail, what did you do with the program money. But that's the mid-level, and that's the threshold for that is 50 to 200. Then the full form is anything over 200,000 in income. These are all income related, sorry. Or if you have net assets of 500,000 or over. And that's the full form, and that's 12 pages. It's a lot of detail, but it's what I usually recommend doing the full form if you're applying for grants, because it's just full disclosure. Even if you're in that 50 to 200, there's just more information, and you're better able to market. These are due the 15th. Just as far as the compliance part, these are due the 15th of 5 months after your fiscal year end. They're due the 15th of the month. So if your calendar, they're due May 15th, but then you easily file an extension for another 6 months. So there's no like huge rush on any of it. The other key thing is you've got to file it annually. Like, you have to. I've had orgs that didn't file it for 3 years in a row, and then their nonprofit status is gone. It's out, and you got to start from scratch. You got to apply for the whole thing over again. And it's a huge pain. It's expensive because you got to do the whole thing over again. You've got to file it annually. Like, you can't forget. I've had orgs, I thought we just did that the first year. It's like, no, every year you have to do it. And there's some, later I'll show you, there's some good software where you can even do it yourself. The important thing is what I started to get into is it's not a tax return. Like, when we're doing our personal tax returns, you want to give as little information as possible, right? This is a marketing tool. You want to use it as such, because foundations, these are posted publicly on websites. There's narrative on the form where you're saying what your program's doing, what your mission is. You need to be articulate. You want to market your programs on that. And that's what happens. I found a lot, because we prepare these forms for nonprofits, but a lot of the CPA firms that do them, they just look at it as a tax return, and they just want to get through it. And that's where you really got to stand up for yourself and say, no, this is what the narrative needs to say. This is what we accomplished. I mean, it's okay to put numbers in there, like we served 5,000 people. Like, this is your chance to market what your org did for the whole year, because this is the only standard form out there. So it's really important that you do that well. And you got to be careful too, because now with all the e-filing, sometimes your narrative that you want to market gets pushed to the back, and you want to try to make sure it's up front. It's worth cutting it down so it stays on the front page, because when some of the software programs, you get everything written up, but then when it comes out, it's actually, they push it back if it's too long. So that's something to be aware of. And accuracy is a must. Frankly, what the IRS cares about, the main thing they check when they get these in is if in the checklist section where they're asking you all these questions basically to see what schedules you need. If you say yes to something and you need that schedule and it's not attached, then they're going to get back to you. But that's really the main thing, is the accuracy of the schedules. That's what they're mostly worried about, because I see some Form 990s that the information is like, you're what? But they don't really read the numbers. They just make sure you're in compliance with the filing. And the other important thing to know about the 990 is it rolls forward from prior years, unlike our personal tax returns where, we lock down a year. This rolls forward. So you can't, once you file the 990, that to me is like that year's locked down, and you need to not change any of the past data, which sounds weird, but it's easy to go back and void a check or do something. And you can't, you've got to, once you file the Form 990, like, that's it, sealed. That's the way you want that to go. So the other tips, like I said, here with the Form 990, it's a marketing tool. Make sure you take some time with your summary description and mission statement, and you can tailor it to the year. If your mission probably hasn't changed, but if if you did something different or something special in that year, make sure and point it out. There's on the front page, there's a mission area, and then on the second page, there's another mission area, and then there's 3 places to sell and market your program. So make sure you do it. I've had foundations that say, just send me the first 2 pages of your Form 990, which they so shouldn't do, but sometimes they do. So you really use those first 2. The Schedule O is way in the back, and it's where a bunch of supplementary information goes. And that's where I was talking about is sometimes if your narrative is too big on the front page, it gets pushed back there. And so I've had, people, CPAs who do this, this is their main thing. They're like, no one reads the Schedule O. So make sure you put important things on the front. And on the functional expense detail too, there's on the P&L, on the statement of financial activity for the expenses, there's a separate form for the expenses. Hopefully you've all looked at these, and there's categories where you categorize the expenses into the accounts, the natural accounts, like we were saying, office supplies, rent, wages, and then you group that by programs or fundraising or admin. And you can make choices there too. For instance, contract workers on that form is just a huge lump sum. But again, working with arts orgs who pay artists, you want to focus, like this is what you do, you support artists. So you want to pull those amounts out and put them down at the bottom where it's like, here, we gave artists this much money. So it's really clear. You need to pick those accounts apart a bit and pull out and really highlight what you want to do. You really want to sell your organization on this Form 990. Just some other tips too. Form 990s that go on forever. I'm actually going to like the forms a little bit, which I know is super nerdy. But other revenue, sometimes galas get tricky. They're fundraising events because for the IRS, they separate out the portion of your fundraising event that was a contribution versus earned. Say you have a dinner and it's $100 a ticket and the food costs you $25. That's $75 of that $100 is a contribution then, and then 25 goes towards the food. And that's a distinction that you make on a schedule, and that can get kind of confusing. Again, the net assets roll forward, and program services, you just, that's the category that you want as many expenses in as you can. And this question 14A and B, this is pretty funny. There's a question on there about, do you operate indoor tanning salons? And it's like, okay. So I've always been interested in what happened that they had to put that on there. So it's just kind of funny, little accounting nerd humor. And then the executive director's salary is disclosed down there too, which some executive directors don't like. Usually it's because it's so low, they're embarrassed. But that's disclosed in a couple of areas too. So just so you know, that's not unusual because, yeah, it's out there. But yeah, Form 990s are super important. You got to get them filed. It's easy to extend it for 6 months. So then basically you have 11 months to file it. So, and then later I'll give you a website where if you want to file it yourself, you can. It's pretty tricky. It can be pretty tricky. So, anything about Form 990s? Luis, you have anything to add on those?
So no, I think it was a great summary on the 990s. In terms of auditing though, what budget do you recommend? What size of the budget do you recommend nonprofits get an audit done?
To get an audit for financial statements? I've never seen one for less than 10,000, even on a small org. Generally, we get asked that a lot. How do I know when I need an audit? The general rule of thumb is 500,000. If you have 500,000 in income, that's when you should start thinking about it. But it's going to cost you, it's going to cost you $10,000. It's a lot. It's a lot of work in audit. If you've got federal grants maybe that are requiring it, sometimes that can be rolled in to what they give you. But yeah, I haven't seen really many audits for less than $10,000. We have some orgs that are audited, income 500 to 750, and they pay $10,000. Got a large org with about 8 million in income, and theirs is 25,000. So yeah, they're expensive. I've had several smaller orgs that maybe, you know, we came in and they don't like that they're paying $10,000 for an audit and asked if they needed to, and we assessed it and said no. And a lot of the foundations too, they understand if you're an arts org making less than $500,000, you know, is that just the way it's worded? I've seen it worded in a lot of these grant applications is we're not audited because it's not a prudent use of our resources, you know, and it's always been fine. I have yet to ever see a foundation grant, at least in this area, that, you know, won't fund you if you don't have an audit. Sometimes too, there's a board member maybe that really insists on an audit and they'll fund the audit. That's another way to go. We've got an org that happens. But yeah, the audit is just, it takes so much time to get the schedules set up, to search for things, because they're going to want to look at everything over a certain dollar value, and then everything else they're going to take a sample of, and you're going to have to find that $7.23 receipt from Chick-fil-A when you know, someone for, hopefully you're not meaning a Chick-fil-A, but anyway, you get my point. You got to find everything. So it's really time consuming. But if, you know, it's just a matter of assessing if you really need one or not. And then with federal grants, you might need the single audit, which is their one step past a normal audit, and then you have to have a regular audit and the single audit, because they kind of have to be done hand in hand. That answer it, Luis? You deal with audits. Anything else? They're a joy, right?
They're a pain for sure. They're expensive, but yeah, to your point, I think that, you know, 500,000 is a number to go by, and usually it's for bigger organizations that, you know, are required to send to the foundations, or, you know, when you're asking for big money, they want to make sure that you have a third party audit. So yeah, key thing. But if you're under 500,000, I wouldn't worry, unless of course, you know, you're asking for a big dollar amount and they're asking you to, you know, for your financials to be audited, then it makes sense.
Right. I mean, if you have to, you have to. It shouldn't. I have an org that's on the brink of it with federal grants, and there was discussion of like not accepting any more federal grants, because I'm like, no, come on, you don't want to stop your growth just because you have an audit. I mean, you want to grow. So yeah, but audits, it's time consuming for staff, it's time consuming for everyone, and expensive. Okay, so that's the Form 990. Another big compliance thing that comes up that I think a lot of people don't understand is the difference between a contractor and an employee. And that's a big deal. Contractors, you pay them, you don't withhold taxes, you just pay them a certain amount, like they're any other vendor. And you give them a 1099 at the end of the year. An employee is on staff, you're responsible for half their employment taxes, FICA. And so employees tend to be a bit more expensive because you have to pay their taxes. Now, so in general, you know, the way to think about it is people think as a contractor is less expensive, I'm going to hire a contract rather than employee. Plus an employee, you have to have software to get, you know, I would recommend software for paying employees. You got to file reports and everything, so it gets complicated. But what happens a lot is you've got a contractor who's like, no, you don't have to hire me on, I just want to work. You know, don't worry about it. But that's like, doesn't matter. A contractor, even if the contractor wants to be a contractor, there's certain things, and it varies by state, and we got people from different states here, but it varies from state to state on what is a distinction between a contractor or an employee, but it's important. Like if you're supervising this person 100%, if they're using your equipment, if they've got certain work hours that they have to be there, they're an employee, they're not a contractor. And even if you're paying them like a contractor, they're an employee, and you're violating labor laws basically. And it doesn't even matter if the contractor is like, no, I'm fine. Like they're an employee, because what it looks like is you're trying to avoid the taxes for the employee. So that's a big deal. And so you need to be really careful of that. Employer taxes, the employer form, for employee, people fill out a W-4, and actually there's I-9s. There's other things too, to hire someone so that they're legally can work in this country. There's other forms, but as far as the taxes go, they fill out a W-4, which tells the program how many taxes to withhold. And then at the end of the year, you filed W-2s and W-3s. And I've got another slide about payroll programs. We'll talk about that. And it's pretty easy once you get it going. And then contractors fill out a W-9, which you've probably had to fill out on behalf of your organization. It basically tells people, here's the name of my company, here's my tax ID, and that's the information you need before you can pay them. But the key thing here is it's also about hours. Even if someone's maybe only working 30 hours is usually the part-time versus full-time for benefits, but because that's another thing if you're trying to avoid paying benefits to people. So but it's very important. Like, just because someone wants to work as a contractor doesn't necessarily mean they can. So be aware of that. And like I said, it varies from state to state, but that's, be super aware of that. Again, here's payroll versus contractors. Payroll is usually paid for filing. As far as that, for payroll tax deposits, you usually have to, when you pay someone on payroll, you're withholding part of their monies that they should get for their taxes, and then you're matching it with the company. That's FICA. You match to equal, and then you make that deposit. For most smaller orgs, you can just make that deposit monthly, but if you get to a point where it's above a certain amount, the IRS is going to tell you, hey, you need to do this every time you're in payroll. So then you start depositing it 5 days after payroll's over. So that has to be done. And then quarterly, there's forms. There's a 941 form, which is a quarterly report, basically reconciles what you've put in. And then state unemployment, again, that varies from state to state. Here in Texas, if you have 3 or fewer employees, you don't have to pay state unemployment. So that's good, but it varies from state to state. And nonprofits do not have to pay federal unemployment. And then annually, you have to send them their W-2 so they can do their taxes. So if you have payroll, obviously you need to pay them, and then you need to make the payroll tax deposit. And then quarterly, you have to file forms. It varies from state to state. And then annually, it's the W-2. You have to file that. And then contractors are easier. You just pay them via accounts payable. Accounts payable is the system that you set bills in, and then you look at what needs to be paid and you write checks. That's just called accounts payable, opposite of accounts receivable. So you just write them checks like normal, and then annually you have to give them a 1099. Those were just due at the end of W-2s, and 1099s were due at the end of last month. So hopefully y'all got those in. For payroll processing, if you have payroll, there's lots of ways to do it. If you're using QuickBooks, you can just tag into their system, into it. It's pretty easy. It's pretty self-explanatory. It's self-processing. I actually have had a group that use Excel to calculate taxes and everything and write their checks to pay payroll, but I highly recommend not doing that. I mean, the tax laws change. You want something that's just gonna keep up with the tax laws as they change. So you can run it yourself. It's pretty easy once you get it set up. You can just go in and click and add, hours if you have hourly people. And then there's third-party processors that will do it all, and that's easy and it's more expensive. Those are some standard companies that do it. It can be up to $75 per time, $125. I mean, it can get expensive. I think the stuff that's connected to QuickBooks is probably the least expensive. There's also another option where you lease employees, which I don't see very much. I mean, you've got to be a pretty big org to be able to afford that. But what happens is if they just have 1 or 2 employees, and because of the nature of their mission, for instance, they really want to offer all the benefits, everything, but they just don't have the infrastructure to keep track of it. You can lease an employee, which is Insperity is the big one, I think, Luis, right? You can basically, your employee technically legally works for Insperity. They get their W-2 from Insperity, and then they can have all the benefits and everything goes through them, but they work for you. But I've only seen that on some really large orgs that have a lot of money, but just 1 or 2 employees, and they just don't want to mess with it. So payroll, payroll's about being on time. If you ever get into trouble with payroll, we had an org that had made their payroll tax deposits in like 3 months. And the key thing with anything with IRS, this is at least a helpful tip, is the minute something's not right, just handle it right away, because that's the key wording is like, we realize this here, and bam, we're addressing it here. Because that's what we had to do, is like, hey, we handle this as soon as we realized it, and then the penalties were much less. That's just an aside. But the contractor employee distinction is a big deal. Anything else on that, Luis?
Yeah, we had a really good question on the 1099s. What's the minimum? So if I pay a vendor of mine $1,000, do I need to send them a 1099? So what is the minimum?
Yeah, it's $600. Sorry, I should have put that in there. It's $600, and it's $600 cumulative for the year. You can't write them 2 checks of $300. That doesn't work. Yeah, it's $600. And another thing is, you sometimes, if you have an employee that you're sending a W-2 for, it can happen that you're also sending them a 1099. That's not good. The IRS is not like that. If you need to do one or the other. Because if you've got a W-2 employee that maybe as a bonus you sent them a check and you give them a 1099, it looks like you're trying to avoid payroll taxes. So you got to do one or the other for sure. And you can't give them money outside the system. That happens a lot, like at Christmas time. Someone wants to give a holiday bonus. Oh, but it's a bonus. It's like it's still income. You've got to record it. You've got to, if you either got to pay it through the payroll system so that it gets taxed, or you've got to tax it indirectly. You've got to give them, you can't just give money to someone who's that amount. You've got to run it through the system. That's happened a lot. Doesn't matter if it's a bonus. It's got to be taxed. Good old IRS.
Yeah, I would just say as an example, one of the nonprofits that we worked with, they paid a vendor $610 and didn't want to send a 1099 because they didn't think it was over the threshold. But to be, in compliance, you need to send it, right? To Lisa's point, anything over $600, you need to send a 1099 too. So
yeah,
for 40.
Yep. And we always do a check like in September, because the best way to get, you need to know people's tax information to send a 1099. And the best way to get that is have them fill out a W-9 form. And we always do a check like September to see how we are, because it ends up that there's always something slips through the cracks. Someone gets paid without a W-9, it's an emergency or whatever. So we always check on it like in September and see how we are, and then see if we're missing any, and then we go collect them early, because it can get to be a real hassle if January 29th you're trying to track down a W-9 from someone, and sometimes there's someone who won't give you one. I had that this year, and it's really it was the executive director's fault that she didn't get one before she paid them, and she actually said, look, just include that as just take it out of there and I'll cover it. Basically record it like I donated that money to pay for it, because I don't want to flag the IRS. If you don't have a W-9 from one and you send it in and you say, look, this person wouldn't give me my tax number, they really go after him. So yeah, you kind of want to avoid that for sure. All right, we're good on that then, Luis?
We're good.
All right. Okay, state filings. This varies from state to state, of course. What I see a lot is once you've got your nonprofit, you've got your termination letter, it's like, woohoo, I'm done, I don't have to pay sales tax. Not necessarily true. Like I said, it varies from state to state, but you still need to apply for sales tax exemption. At least here in Texas, you have to ask the state for exemption from sales tax. So don't forget to do that. Just don't assume you don't have to pay sales tax, but hopefully all of you know that as a nonprofit, you don't have to pay sales tax. So make sure that you filed for that properly and get that in. And the same for franchise tax filings. Again, this is in Texas, that's what it's called. You need to make sure they know, because the way the nonprofits work is you incorporate and you get a company, and then you apply for the IRS, and then you need to come back to the state that incorporated you and make sure you've got everything filed properly. For sales tax, for franchise, you shouldn't have to pay for any of that, but just make sure, because a lot of people seem to assume that they're okay with the state, and you need to make sure, look it up with your state, and we can help you with that if you need to track down. We We do things in California. We do things in a couple other states, so we're getting to know the rules. But it's all online, and you can figure that out because it varies. But don't assume you're okay with the state just because you're good with the IRS. It's a different thing. And the same with unemployment insurance. Like I said, here in Texas, if you have 3 or below, you don't have to pay in, and the employees can still use it, but you don't have to pay in. So that depends on the state as well. If you're from a different state than Texas. So compliance, non-payroll compliance summary. This is kind of it for the federal on an annual basis. You got the Form 990. There's another report that we figured probably didn't apply to you guys a bunch, which is the 5500, which is on retirement plans. That one can be super tricky well, it's not that bad. If you have that for some reason, you can usually call the company that's holding the funds, and they'll like walk you through that. I know Luis works with an org that has that, and they'll just walk you through it and tell you what to file. Those are a lot to track. And then the 1099. So that's like the annual stuff you have to do for the federal government. And then the state, if you have sales tax, that's most likely once a year also, if it's not a lot. Would also want to, again, this is Texas information. In Texas, your nonprofits are allowed 2 fundraisers a year where they don't have to charge sales tax, say for silent auctions or things. And then after that, they have to charge sales tax. So if you're having 4 fundraising events where you're selling things, you need to kind of pick the 2 that are going to be tax-free. Obviously the 2 that you'll sell the most at, and then the rest you're supposed to charge sales tax at. And generally, if there's an org that has a store that's selling something online, like just to stay out of trouble, you need to charge sales tax on that. That's not the exemption on the sales tax is for like fundraising events. But if your store is online all the time, that's not a fundraising event, that's sales. So orgs that sell things like that, it's usually pretty small, and you just pay it once a month. And some of them too, it's so small that they don't even collect it really. They just, they'll pay $20 for a t-shirt. They'll collect $20 from a t-shirt, and then they just pay it later. They don't really track it. We just track the sales amount of merchandise and say it's, $1,000 for the whole year. And then they just pay an $80 for sales tax. They don't really actually collect it from the donor. But, you just got to be aware of that. And if you are trying to not pay sales tax on purchases, there should be an exemption form that you fill out. Like I said, we know what the Texas one looks like. Your state should have one. And it's basically you saying, hey, I'm a nonprofit. I'm exempt from sales tax. And you're signing off on saying you don't have to collect sales tax from you. Same kind of thing if you were like a wholesale person. So that's important to get that as well. Make sure you've got that sorted out. So yeah, so that should keep you in compliance with the federal government and the state. Are there any other compliance questions? Luis, did I forget anything?
Yeah, just a couple questions. One, in terms of FUTA, right, the unemployment tax, do nonprofits pay that?
No.
Okay.
They don't have to pay that at all. And that happens some software programs, payroll software programs, may be withholding that because the preferences aren't right. Or if you lease employees, sometimes since you're not really the employer, they'll pay it. You have to pay it. But no, nonprofits don't have to pay FUTA. Okay,
great. And then another question, going to the W-9 and reporting out, your 1099 vendor payments. If you pay a vendor $1,000, but $300 was for a printer, are you supposed to report everything out?
No, that's a really good question. I wasn't clear on that. I need to change my presentation. Yes, the contractors is only for labor type things. I'm so sorry. I should have had that clear. It's not for product. If you buy something from someone, no. So for that, if you get $1,000 and $300 was for a printer, they get a 1099 for $700. Yeah, that's a very good question. I wasn't clear on that either. If you paid them $1,000 and the printer was $500, then you don't need to send them a 1099. Now, just if you're on the other side of this transaction, you still need to report all your income to the IRS. It's just It's just, you don't have to go, the company doesn't have to go through the process of the 1099 unless it's $600. But just on personal taxes, if you ooh, good, I didn't get a 1099 for that, you're still supposed to report it. That's like between you and the IRS. But yeah, that's good. It's for labor. It's for labor. And some of the labor gets tricky, like advertising is always tricky. You know, if you've got people marketing, was it labor? Is it? So yeah, there's always some tricky ones in there for sure. I work with the art gallery, and they've got framing and restoration, and sometimes it's labor. And sometimes vendors don't break it out for you. Say they're doing a big art install or something. I mean, there's labor and there's parts. And if they don't break it out from you, it's always best to be conservative. You know, if you don't have it broken out, I would definitely send the 1099. But that's a good question. Yeah, I should have had that clear on that slide. Anything else, Luis?
That's it. Thank you, Lisa.
You're good. Awesome. Kelly's back on. Am I running out of time?
No, you just have about 5 minutes left. I just wanted to
Okay.
make sure that I was present. I have nothing to add to what you all have to
Okay.
offer.
Okay, great. I think we're grant tracking. I definitely wanted to get into that. In QuickBooks, in any accounting software, there's going to be a field where you can track a grant. This is important because if it depends on the foundation, but if they're giving you money for a certain program, you need to report back, this is exactly what we spend it on. It's always tricky. Direct expenses are easy, like, oh, we bought this printer for this program, easy. Although it's going to be on the balance sheet, like that other question, so you might have to go find it. But then there's things like shared costs, facilities, like if you're paying rent for a building, you're going to have to allocate that kind of expense on based on square footage. It's just the shared expenses get tricky. But basically, the basic concept of tracking grants, if you're running a software program like QuickBooks, what we've switched to is there's classes, which is like another field. It's just another field in the data field, like that you can pick. But what we've been doing lately, which is working even better, is you just tag a donor. Say when there's an expense for paper and it's for this specific project, you just tag that donor, and then you can run financial statements, P&Ls, income statements for just that donor, and then it'll be up here will be the income. They gave us $10,000. Here's exactly what we spent on that. So it's great. It's so easy. It's so easy, but that is assuming everything is allocated properly. And this next section, the allocation of shared expenses, is where it gets tricky. If you've got office space and you're running 10 different things out of it, you need to estimate how much of that space is being used for what and how much your rent is, and you just allocate it. Say it's $1,000 for rent and you're doing 2 programs in there, then you split that $1,000 between those 2 programs. This is next level of nonprofit accounting, but I just want to make sure y'all are aware of it. And then for other expenses too, say it's office supplies or software, Dropbox, say Dropbox, everyone's using Dropbox. Then if you've got 3 employees and 2 of them are doing the programs, and you charge 2/3 of the Dropbox fee to their programs because you're sharing it. And it sounds tricky, but once you get it set up, it works pretty smoothly. But then it's just so easy to report on those grants. Because some of them get tricky. Some foundations are really loose. It's just operating. I mean, the Holy Grail, right? The general operating funds. And then some really want a nice tied down report. So you have to know what you need to report. And then also you need to prioritize your releases. If you have a grant expiring next month, obviously spend those funds versus the one that doesn't expire for 6 weeks. So this can get super complicated. Once you get it under control though, it works pretty well. But you could definitely, grant tracking is something you need to do if you have specific grants. Luis works with an organization that has so many, he goes crazy tracking grants, allocating things. And classes used to be the way you did it, and you set those up separately. But about 2 years ago, QuickBooks kind of added a donor field, and we're finding that it's easier, but it takes a little bit to transition. And just keep it so simple if you can. Try to, it's okay to make assumptions, like especially on these allocations, make the same assumption for the whole year. Just, you don't have time. You can't go back in and adjust these week by week or month by month. Luis, you must have some grant tracking trips based on your experience.
Yeah, I mean, it's just, it's really important to manage your funds, right? I mean, I think a lot of times folks don't realize, if you have multiple restrictions on each grant, unfortunately, QuickBooks doesn't really do a good job of tracking it. So you really need to keep like an offsite workbook to kind of track all your grants. But yes, I think it's also, very critical to have, if you're receiving multiple grants for, different, that carry different restrictions. That's not the case for a lot of nonprofits. I think, when you have one, you got only one mission, or you're just mission oriented on one goal, I think, you're probably going to be okay. But it really depends on, the contract that you get from the donor. So it's just good to track it if you need to.
Yeah, if you're really small and maybe you only get 2 restricted grants, you can kind of keep that in your head. Like, okay, this is funding this is funding this. And you can make that work for a while. But once you get a bit more complicated, it's like, I need to keep track of this, because obviously you can't pay for the same expense out of 2 grants. I mean, you cannot double dip. So when it gets complicated, that's when you really have to get on top of this for sure. All right. Grant tracking questions. Anyone on anything on that?
No.
Yeah, it's a whole another aspect. All right. Let's run through some other things. I thought some of you might have questions about this PPP loan stuff. It's been crazy. I mean, if the first round, they were figuring it out, it was really crazy knowing what they wanted. The second round was a bit more together, and they seem to have dropped out some of the information. I don't know what the forgiveness is going to be like, but so what we know is, there's the PPP loans. And yesterday someone told me there was maybe a third round coming out. Have you heard that, Luis?
I have not, but I'm sure.
Yeah, I don't. Yeah, I was like, no, okay, because there's first round that we haven't processed forgiveness yet. But that's a great source. Of course, you have to have employees. Big deal. You can't get it if you don't have employees. But then there was the SBA $10,000 loans too that came out. Now I just want to make sure that's like, I had someone the other day text me, how do I reply for my forgiveness? And she doesn't have employees, but she got SBA money. I'm like, that's a loan. You have to pay that back. And she was kind of surprised. So it's paid back over time, I think 30 years at a very low interest rate, but still, that if you got that $10,000 and that's all you got and you don't have employees, you do have to pay that back. And now this other COVID relief that's coming out, well, it's been out, is this employee retention. And frankly, I'm still figuring that one out. It's a credit against your your personnel taxes, your FICA taxes. And Luis, I haven't talked to you about this yet, but it's come out. It expires at the end of June, but you can't calculate it based on funds you've received PPP amounts for. So it's a bit tricky, and it's not as out there, because for the PPP loans, banks were providing them in the SBA. So there was kind of profit motive for the banks to get them out there, but no one's really going to make money off these tax credits, these employee tax credits, except maybe CPA firms figuring it out. So I've got to really figure this out, read up on the data, because it might save some money too. Because you just, instead of paying your payroll taxes, you just hold something. So that's the COVID relief that we know about so far, at least in our area. And then there's a bunch of smaller state, county things that have been out. You just have to keep your eye out for those. I think we already talked about, do you need an audit? We already talked about that. And how do I handle in-kind? In-kind, are things that are donated to you. There's in-kind facilities can be donated to you, which is great if you've got in-kind rent, in-kind labor, and then there's in-kind, actually goods, supplies. Now, in-kind is great. It can be, if you don't have a lot of it, in my opinion, it's best just to keep track of it and then enter it at the end of the year, because it's non-cash. So when you look at your P&L, it overinflates your revenue, because it's not really cash you had to spend, but it's a donation, and it overinflates your expenses. So sometimes it's easy, especially for smaller orgs or younger orgs starting out, to not to forget that, oh, that's not really cash. So I tend to like to, if it's small, just keep it until the end. So then I'm just running, when I'm doing my cash balance forecast, it's less than I have to back out. But donate, obviously these donated goods are great. As far as Form 990s, you can't include donated labor or donated facilities. So if you're trying to do something for a Form 990 to look better on that, it doesn't matter. But if you have it, it's good to record it. But I recommend doing it at the end of the year if you can. With it, and you're not, for filing for grants, you entered with a journal entry, which is like scary, pretty nerdy accounting thing. You got to go into the debit and credits and all that. So and then there's donation letters. Make sure you acknowledge your in kind. In kind is a whole area. Are there any questions so far on any of that, Luis? Okay, great.
No,
And then I just wanted to add
we're coming to the end, right? To the end of
right.
the presentation.
I just wanted to add a couple tips.
Yeah, folks are dropping. Well, folks are dropping off, it looks like, and one of the questions, like the key thing is,
okay,
what do you do if you're just starting out? You're a new nonprofit. What do you recommend are the key takeaways for them to be successful under finance and accounting?
Okay, definitely get a program to track your accounting. Get a treasurer. Get someone who knows a little bit about finance just to keep an eye. That's just a good internal control, someone to keep an eye on what's going on. And keep up with it. You got to keep up with it. You can't wait till year end and go, oh shoot, I need to do this now. You got to keep up with it. And plus, there's so much fraud out there in bank accounts and everything. If you don't report that immediately, you can't get it back from a bank. So just keep up with it monthly for sure. That's the biggest thing I see is people not keeping up with it. And if you get QuickBooks set up and get going from the start, it's not that hard to keep up on. And then just these 3 little tips. Keep the day up to date. That's my last tip. Passwords. You guys, you got to keep track of your passwords. And anything that's like for a QuickBooks Online account, for example, set it up with something neutral like accounting at, contact us at, your website address, not someone's own name. It is so hard to get that transferred if personnel changes. That's a super, super good tip. We spend a lot of time getting people's passwords back and trying to get access to their accounts needlessly if you set it all up correctly. Yeah, here's just some useful information. QuickBooks courses, like I already said, United Way, someone asked about this, local universities. GuideStar is great to look at other people's Form 990s to see how you're doing, see how you're doing against people who do something similar, their narratives. Techsoup, go look at Techsoup, see what you need. You can save tons of money. And then these are some websites that we use. It's that Form 990 online to file. You could go do your own Form 990 on that. They've got lots of checks and balances, so they'll tell you if something looks way out of skew. And then the 1099 to file 1099s online. And then the IRS website. I know it's like scary to go to the IRS website, but it's actually, you can find some good information there as well. And then you can do it, really. It's not that bad. It's intimidating, but you can do it. Just think of it as like a fun math game. It's like you get to play Sudoku for fun. And feel free to email us with any questions, anything you had that was super specific that we didn't address, email us and we'll get right back to you on that. I hope you found something useful in this time. It's a lot. It seems like a lot, but once you get under control, it just makes so much sense. And the information you get from having good accounting data, it's just invaluable. Anything else, Luis?
No, I think this was great. Thank you, Lisa.
All right.
Well, I want to thank
everyone.
both of you for this. This was really, really helpful. And I think you all have any anxieties that people may have had about questions around issues. I think that your answers reconfirm your final statement that you can do it. And that there are plenty of resources out there that doesn't require you to pay someone just to get more information. And so
Yeah.
I know that Karis has already put in the chat the way to get in contact with you all if
Okay, great.
you all want to utilize their services or have more questions beyond than what was asked and answered today. And we would just ask you all to, say subscribe to us. So when we have you all back, because there's no doubt we will have you back, that you all will join with us. So thank you again, both, for presenting such great information. We appreciate you joining us today.
Oh, you're
Thanks,
welcome.
everyone.
I'm happy to help. Happy to help. All right. Thanks, everyone.
Take care.
Thank you.
Bye.